how to make sure that your dividend portfolio is actually pays you dividends, is robust enough to withhold any sort of market conditions. Hello everyone, Alex is here. I'm still sort of YouTube vacationing. You can see this piano behind me. It's pretty cool, huh? And I'm still into dividend investing and trying to build the best portfolio out there and invest into stocks, dividend stocks. They can pay you dividends through the worst market corrections out there. As historically, stock market has corrections, some sort of significant corrections, actually every 10 years. This is pretty much consistent number. And during these corrections, a lot of dividend stock companies actually drop or reduce their dividends or cut their dividends completely. That's a normal process because they still want to generate some money to actually sustain their business and be afloat, right? So they cut their dividends. How to make sure it's not going to happen? Actually, the best way to do it is actually invest into ETFs. But if you want to invest into stocks, there's also a way to somewhat prepare yourself for these situations. Before we start talking about all this, I think you gotta like the video. Make sure you like it. It's gonna help the YouTube algorithm to do all the work it needs to do. That's the whole purpose to actually build this YouTube, for liking the videos, right? So do that. And now we are ready to look at these dividend stocks and why, and find the companies that actually pay out these dividends throughout whatever is happening out there, right? And you're waiting for this magic pill that's gonna fix all the problems. The best thing to actually notice with these dividend stocks is actually find the companies they are robust, they have the best balance sheets out there, and they historically paid their dividends throughout the worst things happening on the market. The other thing I didn't mention is that you gotta look at the companies that grow their dividends also consistently, because if the companies actually grow their dividends year over year, it means they're actually paying these dividends also year over year. And there are companies like that. There are actually two companies that I'm going to be focusing on today, and both of those companies actually not only paying pretty high dividends to their investors, but also have a pretty good share price appreciation over the last 5 to 10 years, which is great. We're going to be getting a lot of returns back, a lot of dividends back as well. So you got to stick around and wait for me exposing these two big boys later in the video. And this later in the video actually starts now. The first company is going to be Northland Power. The ticker symbol is NPI.TO. And there is no question that renewable energy actually started to become one of the most hot topic out there. People are talking about it. People are installing their solar panels on their roofs. People are all watching this big ventilators come into play. Ventilators? How you call this? The wind turbines actually built in all the cities out there. Canada actually has a ton of those as well. And there are companies who are actually building those, and they're generating money of those. And the more actually humanity is going to be involved into this renewable energy stuff and all that, then the more these companies actually going to be getting money, and the better for investors of these companies, because we can see that these dividends, the growth is going to be sustained, and the dividend is going to be paid out on a regular basis. And for Northland Power, for example, only last year they increased their revenue by 24% to $2.1 million, while also growing adjusted cash flow by 19% to $1.1 million. This is great for a company like this, and you can see this renewable energy coming into play, and the company who are actually in this business start to benefit from it. Northland Power has actually capacity of 2,681 megawatts and expects to roughly double that number with its current projects that are under construction or advanced development. That tells us that the growth for this company is only starting up right now. They have around 60% in wind generation in their portfolio, with focusing on offshore wind around the world. Their current dividend yield is around 2.8%. For a company like this is actually pretty high, because you're going to be also getting a lot of returns from the share price appreciation, where the compound return, including dividend, is going to come into play at around 18.8% year over year. This is unbelievable returns for a company like this, because you're going to be collecting something to your pocket in terms of dividends and also gaining from this momentum in the renewable energy sector for a long-term period. The company is not necessarily growing their dividends consistently, they still increasing them time over time, but because the balance sheet for this company is actually insanely great, they actually lined up for a great potential over the next little while, I would say around 30 or even 40 years ahead of them. You can rely on their dividend payments every single quarter. Let's take a look what we have from our metrics for this company. Their market cap is around $9.5 billion, so it's a huge company. They grew pretty fast over the last couple of years, and they are not actually stopping here. They keep investing into their business. They actually have a plan to invest around $20 billion in the next 5 years in order to grow and expand their portfolio of their renewable energy sources. Their current dividend yield is around 2.8%, and their 5-year average dividend yield is actually at 4.8%. So the current dividend yield is actually lower than they used to be. It might seem that the share price right now is a little overpriced, but they actually dropped since the beginning of the year. So right now is probably one of the best times to invest in this company during this year. And they're also, I think, are lined up to increase their dividends in the nearest future as well. So the dividend yield is actually going to be only increasing going forward. Their beta parameter is around 0.44, so it's a little volatile stock over the short-term period, and it's understandable because it's sort of in the middle of growth and dividend stock, so it's still jumping around back and forth. And their current share price is around $41. Overall, it's a pretty good company. They're lined up for a pretty big growth ahead of them, and you can hold it through all the different market conditions and not actually afraid to lose their dividend payments. Let's move on to the next one, which is, I think, most favorite stock for a lot of people, and I still want to cover it, and I have it in my portfolio as well, and it's Algonquin Power. Their ticker symbol is AQN.TO. Another great and outstanding renewable energy stock that has high dividend yield, amazing balance sheet, and lined up for great growth ahead of them. The stock right now is actually down around 11% since the beginning of the year and around 18% since the all-time high it had earlier this year, which means that right now is actually a great time to invest in this company because no matter what's going to happen, they're actually going to be growing over the long-term period for sure. And right now is actually a pretty good time to capture a pretty high dividend yield of 4.5%. This is actually the highest dividend yield they had throughout their history. And that means that once you have this dividend yield, once you invest in this company right now, you can buy more shares, which means your drip is going to be lower and you can faster build this compound growth over time. And Algonquin Power, comparing to the Northland Power, is actually increasing their dividends consistently year over year with a rate of around 10% per year. That's crazy. It means they increase their dividends 10% every single year. That's compared nicely to the S&P 500 overall year performance. But on top of these dividend increases, you're also going to be getting the dividends back and also the share price appreciation over time. As over the last 10 years, the share price of Algonquin Power grew by 230%. That's insane. With renewable energy getting even more popular in the future, where humanity wants to actually start using it more and more and rebuild our planet, make it better, make it greener and all that, Algonquin Power is going to be on top of that. It's going to be helping out everyone else and themselves in the first place, and also their investors in the second place or third place, where we're going to be getting these dividends back and the growth, right? So that's the whole point. And they can sustain any sort of market downturns. They proved it through last year, where they also increased their dividends by 10% and they didn't stop paying their dividends, right? So that's what we're looking for from these dividends companies. They can sustain any sort of market corrections. Now let's take a look at their metrics. Their market cap is around $11.3 billion. So it's a huge company, compares nicely to a Northland Power, but their current dividend yield is actually way higher, around 4.5% right now, where their 5-year average dividend yield is actually at 4.3%. So they actually lined up nicely with their dividend yields over the last 5 years compared to the current dividend yield, which is great. The company sustains its dividend yield over a long-term period. They also pay their dividends on a quarterly basis, and they also increase their dividends every single year at 10% rate for the last 10 years consistently. This is amazing, right? Now going into the payout ratio is at 40%. So the company actually have a lot of revenues that are holding back in order to invest into their business, to expand their business and make it even more sustainable, to get even more cash flow back and even getting more returns for their investors. As I said, over the last 10 years, the share price grew by around 230%. And now looking at their DRIP amount is actually very affordable, it's around $1,700. So you only need to invest $1,700 into this company in order to get enough dividends back that you can reinvest directly into this stock and get another share of this stock, which is great. This is the best, I keep saying this, but this is very important. This is the best way to compound their dividends, to compound your dividends over the long-term period. So this is the way how you grow your dividends within your portfolio without any sort of effort at all, right? You just reinvest all the dividends you're getting back to these stocks. Their current share price is around $18.7, so it's very affordable stock right now if you want to enter this company. And also they dropped from around $23 to $18 since the beginning of the year. So if you want to improve your position with Algonquin Power, right now is one of the best times, right? So 2 great renewable energy stocks, 2 great renewable energy dividend stocks that you want to invest this year, and right now is probably one of the best times to do it. And these companies can sustain any sort of market downturns. With all that, thank you for watching. Don't forget to smash the like button. That's gonna help me and the YouTube algorithm, and it's gonna help everyone else to notice this video. I'll see you around. Subscribe to my channel, hit the bell. All the best out there. Keep investing. Cheers, bye.